All right, welcome everybody to another episode of Gold Silver Bitcoin Show. We're sitting down today with Don Durrett of goldstockdata.com. Thank you so much, Don, for sitting down with us today.
Thanks for having me on, Justin. We're two of the people that like gold and Bitcoin both.
Yeah, I don't, Robert F. Kennedy Jr., and this is not what we were going to talk about today, but just real quick, he kind of has articulated ideas about what the US dollar could be backed by. And he articulates this idea that it would need to be a variety of assets. And he mentions precious metals and digital assets. I, of course, would argue only Bitcoin. I think I don't want to put words in his mouth. He's either he might use the word crypto, he might use the word Bitcoin. And I think that that's probably a more reasonable direction than just saying only gold, only Bitcoin. That's my, and so diversification is a long time idea in these markets, and a lot of Bitcoiners are turning that on their head. They've been proven right today, so I'm not going to interject my opinion into that. Anyway, Don, thank you so much for joining us today. We want to talk about institutional adoption, and before we record, I met Bitcoin. So Bhutan and El Salvador are two countries mining Bitcoin, and then there's also, of course, a wave of institutional adoption taking place with specifically Bitcoin. So what are you seeing in terms of the institutional adoption, and what do you think the implications are on maybe a macroeconomic scale?
What was the last question? Macro?
What are I guess what are the implications of the institutional adoption of Bitcoin?
Oh, massive. Yeah. So as far as, the Bitcoin price and where Bitcoin's going, for me, it's all about institutional adoption. The retail crowd can only push it so high. And then you need more money to come in to, because Bitcoin's kind of if you want growth, you're going to need more buyers to come in. So for me, it's all about institutional adoption. And I've always thought you need to get to, $100,000, got to get to six figures before it really gets the attention of, say, sovereign wealth funds or pensions or insurance companies. But once you get to six figures, if it's growing at a rate of anywhere from 10 to 20% a year, if a company thinks they're going to get a 10% return, they're going to be really interested in, especially if they can get a 20 or a 30. So I think we're going to, institutional money is what's going to push Bitcoin over 100,000. But I think the key net level, we need to get an all-time high, right? 75,000. You get above 75, you get it above 80. And then I think, you start to see the institutional adoption jump in. Right now, Michael Saylor is really the only company. I mean, if you think about it, who else besides Michael Saylor and MicroStrategy has a big chunk of Bitcoin on their balance sheet? I mean, they're the only one. And I think it's going to be a multitude of companies that use that same strategy of basically saying, okay, I have basically fiat cash, US dollars in my balance sheet, in the tens or hundreds of millions of dollars. Why don't I hold some Bitcoin, which will, diversify out of some of that fiat risk. So I think that'll push it up as well. So basically institutional adoption and then companies putting it on their balance sheet. I think those are kind of the two triggers to get us above six figures and to hold it above six figures.
There's talk of the Federal Reserve lowering interest rates, either between, I guess, 25 basis points or 50 basis points. What are your thoughts on that? What would the impact on Bitcoin be?
So the impact on them lowering rates is really fascinating. I mean, that's a question. I mean, a big question, macro question. But for me, I think it's actually going to do the opposite of what Wall Street is expecting. Wall Street thinks if they cut rates, it's good for the economy. We get a soft landing. Everything is, we can basically keep growing the economy. We don't go into a recession. I think the exact opposite is going to happen. I think they're going to cut rates, and then the economy is going to go into recession in Q4, begin to go into one. And then they're going to cut rates again, and it's not going to help. And then the recession is going to take hold. Now, initially, I think that's going to push Bitcoin down somewhere between, I would say a ballpark number in the low 40s is kind of a good target for me, low 40s. Low 30s is a possibility, but I think that's kind of the lower end. That's kind of the overshoot area, but I think low 40s, high 40s are definitely in play here during Q4. But next year, I'm very bullish.
Yeah,
I think
and,
gold
and
will
I,
go up next year and Bitcoin will go up with it.
I would throw it could even go down as going right back up so quickly. Go ahead. Excuse me.
Yeah, I don't think gold or Bitcoin will stay down very long. A month or two at most is my feel, and then we'll be ripping higher. I think next year, I think gold, Bitcoin, and oil are all going to kind of lead. Those three, I'm really bullish on. I just think they're going to go much higher than they are now when we go into recession. You know, you think oil would go down in a recession, but because the dollar is going to go down, it's going to put some upward pressure on oil. And I just think there's going to be some supply issues. I'm kind of in the peak oil camp. I don't think there's going to be enough oil. So I think next year it'll start to go higher. Maybe that'll be the second half of next year. But if oil and gold are up, I think Bitcoin's going to follow. And so I'm very bullish. I'm expecting six figures next year, not this year. I don't know if we'll get a new all-time high this year in Bitcoin. Maybe, maybe not. I would say probably not, but next year, six figures is my take. One thing I wanted to say back, you mentioned Bhutan and El Salvador. I think Iran is also mining Bitcoin, and there's probably a few other countries that are mining it. I'm maybe not saying it. I wouldn't be surprised if Russia's mining it because, I mean, you can make a lot of money doing it. So I think more countries will mine Bitcoin and hodl and not only mine it, but buy it. I think that's a real fascinating area. The other thing is El Salvador. I don't think they're going to be the last country to adopt it as a currency. I think there's going to be a couple more countries in the not too distant future that basically copy El Salvador. One thing I wanted to come back to that I wrote a note on earlier. You talked about RFK at the very beginning about how we're going to create a new currency or whatever. Do we use Bitcoin? I don't think Bitcoin works as a currency because it appreciates in value. It's an asset. It's like gold. You don't want to spend your gold. You buy gold, you hold it long term. I think that's what Bitcoin is. I think Bitcoin, the number one use case for Bitcoin for me is collateral. I think it's the perfect collateral. If we have time, I can go into explaining why I think it is. But number two is hodling. And number three is transactions. And I actually think transactions is like 5% of the use case for Bitcoin. I think, collateral is like 60 and hodling maybe 50 and hodling is 40. Maybe initially it's going to be 70% hodling and 25% collateral, but that'll flip over time. Over time, I think Bitcoin is going to be the perfect collateral. And so the currencies we're going to use in the future, I think are going to be stable coins. I think there's going to be a multitude of stable coins, and everybody's going to pick which stable coin they want to use. And I think most of it's going to be private money, most of it will be private stable coins, but there'll also be government stable coins. And it's going to be really interesting to see how they create them. They won't really be, if it's a US dollar stable coin or a euro stable coin, they're not really stable, really. I mean, they're basically depreciating in value. But it'll be interesting. But I think the future of money is crypto.
And I do too. I think it's mostly Bitcoin. I Michael Saylor let slip at the Bitcoin conference this year that he might not be full maxi. Thought that maybe 12. He thought everything would go extinct in crypto except for maybe he said the number 12 proof of work coin specifically. That is to a degree kind of the view I am adopting more or less, although I'm not a like extremist in any
Well,
way, shape, or form.
let me explain why that thesis has a big hole in it.
Okay.
And the reason why it has a big hole in it is Bitcoin is a first generation blockchain, and it's not really built to create a private financial system. So you can use Bitcoin and build on top of it using L2s and whatever, but those are alts. And so if you think that, okay, so Bitcoin is basically going to support those L2s and make those L2s work, if that's your thesis, I think I don't think it holds water at all. I think that if the future is crypto, it's all going to be about creating applications. And the people that are going to create the applications are the blockchains that have the most flexibility. And so I think the people that are the maxis are really missing the boat on the fact that the future of crypto is really creating use cases that work. And I think DeFi is going to be massive. And I don't think Bitcoin is going to dominate DeFi. And the reason why is because you can't do any DeFi on the chain. It's all going to have to be L2. So if it's L2, then those are alts. And so basically we're going to have a plethora of alts. That's the bottom line. If we're going to have a plethora of alts, the best alts are going to win. And if you're going to create a financial system, which I believe we are, it is going to be encompassed by a myriad of alts, not just Bitcoin. And so the maxis have it all wrong. Now, where the maxis have it right is that Bitcoin is the only crypto that's a store of value. All the others are not. All the others are software applications. But they're like Microsoft Windows or Apple iOS. They're operating systems. And operating systems are very valuable. And that's what these alts are creating. They're creating platforms that you build on top of. And that is an unbelievable use case. For example, Ethereum, all they do is create a platform, and then all these companies come in with these projects and build on top of it. And to say that those are all going to go away is the same thing as the skeptics in Bitcoin. The skeptics that say Bitcoin's going to zero. It's really the same mentality, is that I can't see the value in these alts. It's the same thing as saying I can't see the value in Bitcoin. You see where I'm coming from?
Yeah, absolutely. I think that some might argue for a totally decentralized layer 2, layer 3 that supports such an architecture. And then some are arguing, no, it's not Bitcoin only. We do, however, think that all of these applications will be better served on a proof of work basis. And these aren't my thoughts. I think these are just kind of what I've absorbed. I'm sort of like a traveler through, if you will, an
Yeah,
observer.
I want to interject there on this
Yes,
idea
please.
that we need to have decentralized layer 2s.
Okay.
That I don't think that's true at all. And the reason why is because if I loan money out, if I'm borrowing money, I could care less if it's decentralized. I don't want to pay back my loan anyway. I hope that whole change goes bust. But the one thing is the blockchain itself. Yeah, I want to get my money. So the people on the other side of it, yeah, they want to make sure they get their money get back. But it doesn't have to be decentralized when you're talking about software. It only has to be decentralized when you're talking about store of value, because then nobody can screw with it. And then it has long-term viability. But as far as a smart contract goes, all that has to do is work. That's all it has to do. So let's say that I think what's going to happen is this. I think that Amazon or Apple or Microsoft, a large company, is going to get into the DeFi business. And that company is going to ensure that your smart contract is guaranteed. Under that scenario, decentralization doesn't mean squat. The only thing that matters is Amazon's reputation. You see that? You see where I'm coming from here? Decentralization is not necessary for smart contracts. All the smart contracts just need to work, and B, we need to have confidence, and they're all short-term in nature. We have to have confidence that my loan or my borrowing within the next 3 to 6 months is going to be good. Decentralization needs to work over a period of time. Smart contracts do not. And that's why this whole idea of, we got to have pure decentralized, smart contracts. It's total baloney. It's not needed. I guarantee you, Amazon, when they finally do DeFi, it will not be on Bitcoin. It will not be on a fully decentralized platform. It will be on the fastest one, the cheapest one.
You mentioned that Bitcoin is the only crypto or digital asset that is a store of value.
Yeah.
What do you think about some of the predictions, which I just read date back to Hal Finney saying that Bitcoin would be $10 million? I believe Van Eck says Bitcoin on the higher end of a scenario over the next 20 years could get to 52 million. Michael Saylor, 49 million,
Yeah,
which like
it's no way. It's impossible. And the reason why is because they're making an assumption that, game theory says has a very, very low probability. And what they're basically saying is that Bitcoin is going to replace all the fiat. And I'm saying there's no way it's going to happen because countries want to have their own currencies and people will use those currencies that are created. So we're going to have a plethora of currencies. If you had one Bitcoin, if Bitcoin was the only currency, if it was the global currency, yes, it could go to 10 million. Absolutely. But the chance of that happening is very, very low. And the reason why it's very, very low is because Bitcoin is a private currency. It's private money. And countries, not all the countries are going to adopt it. Some will, but those that do is going to be a minority. Instead, Europe and the US, they will create their own digital currencies. And they might have a little bit of Bitcoin backing it. That's a possibility. You could have, I think the US is going to actually break up over the next 10 years into a series of countries. And then some of those countries could use Bitcoin, possibly. But again, Bitcoin is a flawed currency because it appreciates in value. Stable coins make much more sense. So if you look at game theory, and what I just explained was that countries are going to create their own coins, their own stable coins, and they're going to be used. So it's not going to be a single currency. So under that scenario, I think Bitcoin's going to go somewhere north of 500,000. Now, 1 million might be a stretch. I would put the target somewhere between 500 and 1 million. But I think
so parity with gold is not guaranteed in your opinion.
Excuse me?
So like Bitcoin market parity with the gold market is not guaranteed in your opinion, like
Oh yeah,
like in the opinion of so many.
No, I think that Bitcoin will eclipse gold. And the reason why is because the younger generation doesn't really like gold. They prefer crypto. So over time, the people that are over 40, over 50 prefer gold. Under 40 probably prefer crypto. So over time, gold will slowly be pushed aside. I don't know when that happens, but I think it happens maybe around 2030. Around 2030, I think Bitcoin will be above that $500,000 point, and you'll start to see a flip where more people are buying Bitcoin than gold. But I don't think that happens in the next 2 years. It's going to be, I would say, about 3 years from now, 4 years from now, I think gold and Bitcoin kind of go at it as what is the number one asset for store of value. And I think that, you asked me today, I think that Bitcoin will eclipse gold's market cap. I think what's going to happen is Bitcoin's market cap will go up and gold will go down towards the end of the decade.
Okay, so now we were discussing Fed lowering interest rates. They increase interest rates to combat inflation, which is it not a product of QE dating back to 2008, 2009, and then of course some more under Trump in 2020. And therefore, like just over a year of higher interest rates, maybe leading into 2 years of higher interest rates. Could that prove ineffective? And if so, where do you think inflation is going if they continue this path of lowering interest rates?
Yeah, I think what's going to happen is inflation is going to come back. And the reason why it's going to come back is because they're going to lower interest rates. And as they lower interest rates, the dollar is going to go lower. As the dollar goes lower, I think we have an inflation problem right now. Now, if you look at the data seems to think that inflation is under control. The PCE, the PCI, everything seems to be under control, right? But I guarantee you, the average family right now, their bills are higher than they were 2 years ago. As far as the families go, the inflation is biting them as we speak, and that bite is not going away. So in other words, it doesn't take much inflation to hemorrhage people. It just takes a little bit, right? And I think that service inflation, like insurance, property taxes, getting your car fixed, having your plumber come out, the service inflation is out of control. And if it doesn't come down, it bites you. And it seems like service inflation is out of control, if you will. And I don't think that's going away. And now they're going to lower rates, which doesn't fix the problem, because the problem would literally take years to resolve, which would be people catching up to all the 20% increase in prices. But people didn't get a 20% raise. And it might be 25%, right? And so I think that what's going to happen, I think we're going into inflation. The other thing is going to be nasty. As we go into inflation, there's actually going to be pressure, downward pressure on income, on wages. Because when you go into a recession, then businesses don't want to give raises, and they actually want to hire people for less money. And they have more people that want a job. So it's a wage pressure is actually going to go down, which that's not what we need to solve the problem of inflation. So yeah, I'm very bearish. I think we're going to have stagflation here for the next couple of years.
Well, how bad does it get ultimately? Because yeah, on the extreme end, Bitcoin maximalists are arguing that the fiat currencies are going to zero. They're in a race to zero, and that argument predates the Bitcoiners. Jim Rickards comes to mind.
Mm-hmm.
How bad does it get? How low do these currencies go? And then somehow let's weave stagflation into that, because I know that's not discussed very often.
Yeah, I like this question. So what I see happening is starting in Q4. So you have basically interest rates going down, and I think that the Fed funds rate's going to go from 5.5 down to 3, maybe a little lower than 3, 2.5 maybe, but I don't think it'll go much more than that. So they're going to lower rates about 300 basis points over the next, say, 18 months. But as they do that, simultaneous to that, I think inflation will go up, and I think that the economy will go down. And when that happens, they're going to start printing money. And as they print money, the federal government right now has a $2 trillion deficit. So the deficit's not going to go down. We go into inflation, the deficit's going to go up. So we're going to have a $2+ trillion deficit for the next 2 years. And the Fed's going to actually have to come in on these auctions every month and buy them up. And as they buy them up, that creates more inflation, because whenever the Fed buys bonds from the US government, that money gets spent directly. And that increases the money supply immediately. Ideally, what the government wants to do is they want people that already have money to buy those bonds. So it doesn't create inflation, but that's not what's going to happen here. The Fed's going to print money. And so what's going to happen is you're going to start to get a doom loop. And the doom loop is where investors recognize that the Fed is printing all this money to buy these bonds, which is creating inflation, which is making the dollar weaker, which is making bonds weaker. So why do I want to hold on to my bonds? And they'll start dumping their bonds. Well, who has to buy the bonds? The Fed, who has to print more money. And so around 2027 is my expectation that this thing all basically comes to a head. So the next 2 years, the government isn't going to want to cut spending, because if they cut spending during a recession, it creates a depression. So they're not going to want to cut. But by the time we get to 2027, the Fed and the Treasury are going to realize we have to cut spending on the federal government level. We have to do something. So we're going to get a reset, I think, in 2027. And I think that's when the CBDC gets released. But there's lots of different scenarios of how this reset happens. But I think what they're going to do is they're going to orphan offshore dollars. They're going to create a new currency, internal United States. and that new currency is going to be digital only. And I think they'll actually get rid of coins as well. It's like the only thing you can spend money on, it's all digital now. We're going 100% digital. Get ready for it. It's all CBDC, and that's all you have. And when they do that, I think they're going to rug pull the U.S. economy, because they're going to simultaneously, when they do the reset, they're going to cut spending. They're going to cut, because they got to get their balance sheet in order, and they're going to cut spending severely. We're talking about the national defense get cut by 2/3 is my expectation. All the troops come home. Medicare gets cut because they're not going to basically spend as much money on Medicare as they do now. They're going to probably cut Medicare by 1/3. They're going to cut Social Security by 1/3. So basically, it's going to be means tested. And when they do that, the whole U.S. economy is going to get rug pulled, because that's less income that basically is going into the economy, because we're no longer going to be able to live off of debt. This is kind of the mandibles scenario where the U.S. basically goes bankrupt overnight.
I think important is that this is going to happen overnight, everyone. It's just going to one day just be different. That's what happened in the Soviet Union. There's a book called Everything Was Forever Until It Was No More, I believe, about the last days of the Soviet Union. People did not see it coming. It was a very traumatic event for older people in particular. Okay, last question, because I think we're running out of time on the account we're using. So this is why I want to do shorter ones, because this is a great cliffhanger. I want to, next time when we get around to this, I'd love to pick up here.
Yeah.
Bitcoin. Where's so Bitcoin's only 500K in this scenario, or a million, or
Yes.
or where does Bitcoin fit into this scenario?
Yeah, well, it's hard to go more than 3 years out, 4 years out. But for me, my target, my conservative target is we get to 250. I think we get to 250. That's kind of my conservative target. My aggressive target is 500,000 to 1 million. But time frame wise, I don't know. I don't go much, but I don't see Bitcoin getting above 1 million. But I think long term, 2028 plus 2032, I think 500,000 to 1 million is a good target. I mean, that's how I look at it. I mean, I'm very bullish. I really like crypto. I think that people that don't own any crypto are making a mistake here. Now, we could be wrong. This is all about belief, because this is a new asset that nobody understands. And we're all guessing here. Anybody that says Bitcoin's going to zero is guessing. Anybody that says Bitcoin's going to 1 million is guessing. We're all guessing. And the reason why we're guessing is because this asset has never existed. We don't know what basically digital money, digital numbers that you can prove that you own has value. But until 2009, this type of asset never existed before. So we just don't know what it means to be able to prove on a secure network that I owned those X's and O's. But that proof of ownership, I think it means something. I think it's worth $1 trillion today. That network's worth $1 trillion today. I think it's worth something, and I don't know what it's worth, but I'm not going to not own it. That's the one thing I realized in 2016 when I did a deep dive, is that I cannot figure out how it dies. I did my deep dive over 100 hours trying to figure out why this thing would die. How does Bitcoin die, right? And I couldn't figure it out. My feeling is, if you can't figure out how Bitcoin's going to die, if you're just guessing, if you can't figure out how it's going to die, number one, then the halving and the security of the network, those two things. So ABC, you take those three things and you add them up, and basically it says the risk reward of the game theory says you got to own it. And I think that's what Michael Saylor figured out as well. He was kind of late to the game, but he figured it out. He's like, wait a minute, how does it die? The halving pushes it higher. And so it's basically a fantastic asymmetric bet. All right,
Excellent.
John, thanks for having me
Great.
on. We'll do this
My
again.
pleasure. Don Durrett, goldstockdata.com. You can see it on the screen behind them. Thank you so much, Don.
Yeah, follow me on Twitter. I do talk about crypto from time to time, although my followers, I would say 70% don't like crypto, 30% do. So I tone it down, because the majority of my followers are gold, silver guys, and they don't understand Bitcoin, so they don't like Bitcoin.
Okay, great. Well, maybe we can change that. one day over time. Thank you so much, Don. Have a great day.
All right, I'll see you.
Same to everyone.